Financial Argument. Follow us on YouTube.
Hey everyone, this is Elijah Johnson with FinanceAndLiberty.com, and with us today, a new guest, Lior Gantz from WealthResearchGroup.com. Lior, thank you so much for joining us today.
Thank you for having me on. I'm very excited to be here.
All right, well, I'd first like to discuss a little bit about your take on where the U.S. dollar is headed. Now, you've said that the U.S. dollar is in its final stretch as the world's reserve currency, and this is the most important change in the 21st century and will affect people worldwide. Can you expand on this?
Sure. So we did a microdoc called Last Breath. You're referring to it. And in that microdoc, I talk about the fact that the U.S. dollar has been the world's reserve currency since 1944. But this has not been the same U.S. dollar. In 1944, the Bretton Woods Agreement made the dollar pegged to gold. $35 was 1 ounce of gold. Now, until 1971, that system played out, but the U.S. during the 50s and the 60s rigged this system to fund the Korean Wars, the Vietnam Wars, many other programs, and European countries, specifically France, and Charles de Gaulle, their president, wanted an audit of the Fed, wanted an audit of the gold reserves with the U.S., and since obviously they couldn't allow it, Nixon took dollar off the gold standard, after Bretton Woods agreements in 1971. Now, for the past 45 years, that has made the entire world on a fiat monetary system. Now, what that means, obviously, is that if you have young demographics, you can fuel their borrowing needs by basically issuing more credit without restraint. So this has caused a huge debt cycle. You can pay for many things as long as the tax revenues meet these borrowing demands, but for a long, long time they haven't done so. So this is called deficit spending, obviously, where you just borrow much more than the tax revenues allow you. Now, as long as the demographics are young and more people are coming into the workforce and the world is getting richer, you can sustain the system. Now the developed world has a very old and aging demographics, and their borrowing needs aren't that large, and they're actually extinguishing out of the workforce. So what you're seeing is basically the need to borrow dollars in the U.S. is, it's deteriorating by the year since the year 2000. And the real problem surfaced in 2008, where the banking system realized that they were in such a mess, no bank would borrow to other banks. The intraday bank lending stopped, and that made a lot of banks illiquid, and it created this fall. Now, in order to create a new sustained system, they just inflated this debt back to life. What this does is create a deflationary cycle. Why is that? It's because the government, when it creates currency via the QE systems, the QE programs, what it does is it gives money to the federal governments, which then spends it. That is that has a very slow effect on Main Street, and that's why they're thinking of changing this into something more like helicopter money, which is basically giving money straight to the people. They can do this in many ways. This doesn't mean you'll get a wire. You can get higher food stamps. You can get you can get stamps for other things. You can get an allowance, a universal allowance, they're calling it. There's many things. What they want to do basically is bring back to life this debt cycle that was so successful, quote unquote, for them for the last 70 years. But the world right now is deflating its debt at a massive level because private debt is closing down. And what this means to the dollar is exactly what you're seeing, Elijah. Since there's less and less dollars, it appears like they're worth more. So you see the index going up. relative to other currencies, which are not distinguishing at the same rate. But if you take a look at the value, the purchasing power of the dollar, though the index is going up, the purchasing power is going down. And if they continue on what they're doing, they will eventually create inflation and money velocity, and that part is out of their control. Once that inflation kicks in, the value of the dollar can be much lower, much quicker, without control. And this is what I think the next stage is after this deflation expires.
Now, do you think it matters who's in power? Do you think this dollar collapse is going to happen no matter who gets elected president?
Sure. Here's two things to think about. The Fed is the only one doing monetary policy right now. I don't see the Congress or any other government saying, hey, we need regulations, we need taxes, we need laws, we need all kinds of things that the Congress can do and the government has power to do. The Fed is controlling everything. As the Bank of Japan in Japan is doing this, the ECB in Europe is doing this. It looks like Congress has put this in the hands of central banks, maybe so they can blame them down the road, or just stay out of this so they don't get blamed for anything. But yes, there is just no other way. The debt will either be reset, so a system reset, inflated, or defaulted. Now, you can speculate as to what you want, but in history, there has been very few times when governments simply default on their debt, because that creates wars on the spot. Now, inflating it's obviously it can create war, and it does create war. You've seen it in the 20th century many times, but it has a different effect on the population, on the people. But the third option, which is like a slow grind, is almost not possible today with everything being so out in the open, and people losing trust in the government so quickly. It will either be a deflationary spiral and then massive printing in many new terms and ways that they will need to create, or it will be a restructuring of everything, basically a reset. I don't know when it's going to happen. Obviously, it's a very complex thing, because 71% of the world's currencies is the dollar, but so much of it is outside the U.S. that so many countries have a vested interest in making sure that this system stays afloat, that it's going to take a very coordinated effort to make this a really good reset. That's why I don't think it can happen. This should and would go out of control at some point, like it did in 2008. That's your case study.
No, you said that if government just defaults, then this can lead to immediate war. But if government defaults, in the other ways that you're talking about, if they just inflate, if the U.S. just inflates their currency away, that's essentially defaulting on their debt. But do you think if they do it that way, other governments holding U.S. debt will see it as a default and want to start a war?
So here's the thing. The U.S. debt is so large at this point that it's not like they can they can create an inflation without other countries being involved. This is going to be a very complex subject with in many sleepless nights for politicians and bankers around the world, calling each other, seeing what they can do. This is not a one-time event that's going to happen overnight. So you're talking about a sustained period of time where people are going to be confused, and governments will try to appear like they got this under control, but there are going to be conflicts happening in many places around the world to divert from economic problems. And you know what? If Donald Trump gets elected, and you've asked about the elections, obviously corporations and how should I say this? Special interest groups, lobbyists, the elite shadow government, whatever you want to call it. Obviously, they are going with Hillary. So if Donald Trump gets elected, it's going to create two things. Foreign governments are going to see that the U.S. politics is out of control. That's gotta create some sort of confusion and high alertness from other governments. And within the U.S., some special interest groups will definitely love the situation where they can blame Donald Trump's policies for all the wrong things that will happen in America. So no matter what happens with the elections here, it's going to be trouble either way. You got to realize that if Trump gets elected, they're going to try and blame him for everything. If Hillary gets elected, then you know what's coming. It's not going to be even a surprise. She, who the kind of people she works for.
Now, getting back to the premise that the U.S. dollar seems like it's going to collapse eventually, you say that when people lose confidence in paper currencies, a kind of accounting period begins. The public revalues precious metals to cover the currency supply. Can you expand on what you mean by that?
Sure. That's again, you're going off of the microdoc last breath that we put out, and what I was saying there is that gold and silver do not have bull and bear markets like regular assets. These are more accounting periods. Let me explain what I mean. An accounting period is where you expand the currency supply, but you don't expand the gold reserves at the same amount. So a country historically has a given amount of ratio. At least 40% of their currencies must be in gold in order to sustain a working economy. Now, for this to happen in the U.S. right now, the price of gold would have to be about 4,700 per ounce. So we're a long ways off of that. So this is an accounting period where gold is looking to create a sound economy, and it just does that. The only speculation in the gold market is when gold does accounting periods. But once it starts, like it is right now, it's basically a sure thing that it wants to cover 40% of the currency supply at least. In 1980, it covered 100%. At $850 per ounce back then. If you calculate 850 times the ounces held in the vaults, it was the entire currency supply. Then it went to a low in 2000, and it has been an accounting period since then. Had this 4-year situation where it was getting back to about 40%. So you saw it going down from 1900 back to around 1000. Now it's going up again because it wants to create this 40% ratio at least. And this is not going to stop until it's about 4,700. Now, I got to say this. When this sort of thing happens, the mining shares, they simply go ballistic. And you've seen it many times before during the 2000 to 2011 period. And now, since January until now, it's been an amazing run as well.
You've talked about how gold is revalued. Now, what kind of revaluation does silver experience?
Okay, so historically, obviously, gold and silver had the 16-to-1 ratio, but silver, when it pertains to the role of money, from the government's and central bank's point of view, it has been demonetized. It's basically, from their point of view, an industrial metal and not money. From a lot of the public investors and institutional investors, private investors, it's still considered money. They are accumulating it. The big thing that can happen with silver is two things. First of all, in the Middle East, in India and China, people are not rich enough to accumulate gold. So they will definitely accumulate silver instead. This is one thing to remember. Second thing to remember, once one central bank or one government says, hey, I want to start accumulating silver as well, the copycat effect of central banking will take into place. Once one central bank lowered interest rates, other ones followed. Once one central bank will start accumulating silver, others will follow. Once they do that, it will remonetize. It will go, I don't know if it'll go back to 16 to 1, but you got to realize it has been trading for about 50 to 80 in a ratio of 50 to 80 to 1 to gold for about 40 years now. So, well, not 40, but 30 years. So you're looking at a situation where it can reprice itself, perhaps even overnight, because the futures markets is so over leveraged that you don't know what happens when people start delivering, asking to take delivery. Silver is very, very unique, and I personally love silver and even more silver stocks.
All right. Well, Lior Gantz, thank you so much for joining us today. Before we let you go, did you want to share with the viewers what investment insights they will find on your website, wealthresearchgroup.com?
Sure. So wealthresearchgroup.com, the main mission of our company is to create a rich plethora of content that will help you to strengthen your financial fortress every single day. So with our free 365 wealth letter, we talk about big picture, what's going on, with central banking and what's going on in the resource sector. On our website, there's one niche that we call wealth stocks. Wealth stocks are basically our long-term compounding ideas. And we have another section called special report. And this is for student investors, people who are savvy in the resource sector and want to know, a drill down of what's going on for every resource, especially gold and silver right now. Also, lithium, uranium, zinc, and what's going on with China and their appetite for resources. That's on wealthresearchgroup.com/special reports, and you can download. We have three niches of mining shares. One is called steroid stocks. Steroid stocks are basically companies run by the top jockeys, just the top management teams, those who have done the best work for their shareholders during this bull market and this accounting period. So you can definitely take a look at steroid stocks on our special reports page. The other niche, Elijah, that I think will be interesting for your listeners is called targeted buyouts. This is where we went out and looked at about 348 companies and researched which companies have projects next to a large cap producer that they might get taken over by them. But we want to place ourselves there, position ourselves well ahead of even the rumors of a bidding phrasing going on, because that makes those stocks go to high valuations. And then our third niche is called satellite businesses, where we take a look at businesses that will profit from the resource bull market, but without taking the risks that traditional miners go through. And so this has been a very large success for us this year. We've profiled about 8 companies thus far. 4 of them have more than doubled. Some of them are on 50% gains or more. And obviously, this is all free on our website. You can sign up and take us to a test drive and enjoy what we do. Our mission is really to create metallionaires, which are astute resource investors who understand the inherent risks of mining, who understand the volatility and the cyclicality, but they also understand the unprecedented times that we are in and the profit potential that can be gained. So that's Wealth Research Group in a nutshell for you.
All right. Once again, Lior Gantz, thank you so much for joining us today.
Thanks, Elijah. Thank you for your time.
This video was brought to you in part by ReluctantPreppers.com. Click here to watch Reluctant Prepper's latest interview with Bill Murphy from the Gold Antitrust Action Committee. With gold and silver markets falling flat after the predicted September 30th, 2016 event of the Chinese yuan joining the SDR, and with the U.S. presidential election fast approaching, how will the outcome of the election play out for gold and silver? Why are gold and silver managed as they are, and when will the current stalemate be broken? Bill Murphy returns to ReluctantPreppers.com to offer insight on the resurgence of manipulation and his prediction on when the endgame will be up.